Today we're beginning into chapter 4 of the Builder's Guide to Accounting. Chapter 4 is super important. It has 3 ratios that you need to know for the test. I'm going to show you guys the ratios in the highlighting video right now, but I highly recommend if you're struggling with these ratios, or you don't know what to do with these ratios, or you don't know anything about the ratios, to join my course. In the course, I go over all 3 ratios and I show you examples on how to plug in the ratios, how to do the ratios. And then in the course, it has practice quizzes with those ratios so you can practice for the test and you'll be well prepared. So I highly recommend join the course. Now let's get into the video. Okay, let's get into chapter 4, managing receivables. But your past experience is still your best indicator of the future. All right. The most common way to chart your accounts receivable trend is to calculate the number of days the average account is outstanding. An excellent way to keep tab on collection is to prepare an accounts receivable average length study as in figure 4.1. So here are the 3 important ratios you need to know how to do. You need to know how to plug in the numbers and how exactly to use these ratios and how to know when they're asking for these ratios in a question. I go over this in the course on how to use these ratios, how to plug in the ratios, all examples, and then there's practice quizzes that have these ratios in there so you can give it a shot yourself. So the first ratio is period of average receivables. The second ratio is 12 months charge sales. And the third one is average days for outstanding receivables. Stay on top of existing accounts, but there's another important part of the receivables equation: prior qualification of new charge customers. Figure 4.2 is a credit application. Make it company policy not to extend credit unless there's an application on file. But when you assign an account to a collection agency, list it in a separate column in your accounts receivable analysis and exclude these figures from monthly totals. Okay. And then right here, another important thing, we kind of went over this in chapter 3. It may help to offer incentive discounts such as 2%, 10 days, net 30. That means the customer can deduct 2% from the invoice when payment is sent within 10 days of the billing date. This is a standard arrangement for shops that offer discounts, and it seems to bring payments in quickly. 99% chance this is on the test. In the course, I go over what a question would look like for this on the test and how to do it, how to do the math on it as well, because they're asking you to do math on it. And one thing I mentioned in the course, if they ask you in a question 10 days net 30, that means you need to know exactly what it means. That means the customer can deduct 2% from the invoice when payment is sent within 10 days of the billing date. There you go. That's why you need to know what 10 days net 30 is.